So I'm speaking again with Owen Lee, of Success Mortgage Partners. Um, so it looks like you were just talking on Breakfast Club a little earlier that give us an update of where like kind of where rates are going
hmm
and how to have that conversation with the consumer when they hear rates are dropping. Let's go into that a little bit first. Where do you see rates going here for the next little bit, Owen?
So I really think rates are going to trade within kind of a tight range. I mean, we've seen, what a lot of people call the red wave trade or the Trump trade, which actually started about 3 to 4 weeks before the general election. We got that swoon in interest rates. I think the low water mark was September 30th. And then very quickly, they started to go back up. We lost about 200 basis points in the market. Since then, we've gained about 100 back, just under halfway back. And so I really think we're in a tight range right now. You see almost a ton of prints of inflation data, both the PCE, that consumer expenditure index, and the consumer price index coming in flat, right about where the Fed has had it for the past 3 or 4 months, 2.5, 2.75%. And we're just trading in a really tight range right now, all things considered. So I think we are where we are, absent the big next shift in the data. And I think that's more driven around jobs than it is around inflation. Although, the Fed's got that dual mandate, they have to look at both. But I think it's really a relatively tight range right now of, wherever we are, wherever you happen to be, in your pricing. Most people in the sixes, the high sixes, maybe you're paying a point and a quarter to get it, something like that, depending upon where you fall. But I think it's stability for the next 60 to 90 days until we gather some momentum one way or the other.
Hey there. Hey, if you're loving the tips so far, be sure to hit that subscribe button right down there and then tap the little bell so that you never miss out on more free cool tips coming your way. Also, I would love to hear from you. Drop a comment beneath there. Let me know what you think or tell me what you'd like to hear next. So the Fed's going to be meeting again here not too much longer. Is there
hmm
kind of a feel or do we have like a percentage of what's the likelihood it's going to happen at that meeting?
Yeah, I think the Fed meeting coming up in about 7 to 10 days is something that we're going to get a 25 basis point cut. There's like a 90 to 95% chance that we're going to have a 25 basis point cut. And I think that 25 basis point cut is already baked into the rates. So, we know that thought process of, um, hey, the Fed just lowered the rates 25 basis points. What's that going to look like? Did my rate just drop? Loan officers are going to get that call. You have to have a 90-second elevator pitch answer to that. And, my thought on that is always to work in the thought process that interest rate markets generally move well ahead of the Fed. And so these markets have already priced in what the Fed is going to do. And so, when you look at what we were talking about earlier, we had that low water mark in rates at the very end of September. Then we lost 200 basis points. We've got about 80 to 90 of that basis points of that pricing back. So the market has already moved. So, I would somehow incorporate in my answer as a loan officer, hey, the interest rate market moves in advance. So that rate drop we've had in our pricing for a few weeks now.
So the conversation would be, hey, the good news is you already benefit from it, and that we've
Correct.
already we in anticipation of that happening over here where we work, which is wherever you as the listener, wherever you work, right? That over
Correct.
here where we work, from our sources of money, we're already getting that 25 basis points discount in our great rate they have today, which is insert in whatever their rate is. Is that the basic bottom script there?
That's the basic script, yeah, because everybody probably, and you might want to take that. Now, when I say 200 basis points, 80 to 90 basis points, obviously I'm going off the bond coupon pricing. So you're going to have to convert that into interest rates, right? 80 basis points, 90 basis points, that's probably a quarter in the actual interest rate that people are charging, maybe a half on a government loan with a little bit of change added into the points that you have to charge. But yeah, I would say rates are down about a quarter, maybe 3/8 since 5 weeks ago, and or I guess 8 weeks ago now. And so that's already been priced in.
All right. So the good news is we move ahead and we've already got that great rate. Now's a good time to act.
Absolutely.
Perfect.
Absolutely.
I think that about covers it here. So, all right, that's it, man. So, hey, Owen, I appreciate you, brother. Great information.
Yes, yes. Always happy to talk interest rates and love watching the market and talking to you about it, Carl.